Welcome to the NR market review. To begin with, let us have a review of what was our short-term outlook presented last Monday. So last week, our observations were: one, we were expecting China's less active presence in the physical market ahead of the long holiday for the Lunar New Year or Spring Festival. So we expected China to be less active last week. We also expected speculative traders turning less active in the futures due to the risk arising from at least three sources. Number one, the US Federal Reserve potentially going for aggressive policy tightening, including an earlier than expected hike in policy interest rates, leading to stronger dollar. We also expected IMF likely to trim its world economic outlook for 2022. We also expected geopolitical tension from possible Russian attack on Ukraine and potential retaliation by the US and its allies in the form of economic sanction. And also we expected NR prices would be affected by negative factors, various negative factors arising from the above factors. But at the same time, we expected cushioning effects from the seasonal short supply of natural rubber. Means that right now, wintering season has started. So we expected some kind of a cushioning effect. Means even if price falling down, the price fall will be limited because of the cushioning support from the cushioning effect from the short supply. Also, we expected that latest price performing better during the last week relative to TSR. This is because latest processing companies offer a premium price. Every year they offer a premium price for fresh latex. This is a strategy to encourage farmers to sell their produce in the form of fresh latex rather than selling in the form of the capillum, which is more easier and also which is more convenient for farmers. But to get enough adequate raw fresh latex, the processing factories every year they offer a premium price for latex. So these were our expectations for last week. And what really happened? Just we can have a review what happened really as against what we expected. First of all, TSR price. First we will discuss the physical market. TSR price. Let us review what happened to the physical market of technically specified natural rubber. Technically specified natural rubber constitutes around 70% of the global production of natural rubber or global trade in natural rubber, which is most popular form. Coming to TSR market, at Bangkok SDR20, the physical market last week averaged 1.5% lower compared to a week before, 1.5% lower last week. At Kuala Lumpur, SMR20 market fell 2.6%. I mean, the average during last week was 2.6% compared to the average a week before. Then coming to latex markets, we have two markets. One is Bangkok and one is Kuala Lumpur. Bangkok market fell only by 0.2%. Just compare that. In the Bangkok market, SMR SDR20 fell by 1.5%, but latest price fell by only 0.2%, means almost 0%. In Kuala Lumpur market, latest price increased by nominally 0.1%, increased nominally, but at the same time, Kuala Lumpur market SMR20 fell by 2.6%. SMR20 fell by 2.6% Kuala Lumpur market, but the same Kuala Lumpur market itself, latest price was marginally upward. Then coming to Bangkok market, RSS3, Bangkok market of RSS3 market fell by 1.0%. I mean, the average during last week was 1.0% lower compared to the average a week before. And another major market for RSS is Kottayam market in India. Kottayam market in India fell by nominally only 0.1% during last week compared to the previous week. Kottayam market actually it was getting support from the demand side because the tire manufacturing sector is recovering from the fall, is recovering, and there is strong recovery. And also we have to consider that India is one among the only India and Japan are the two countries where IMF did not scale down the outlook for economic outlook for 2020. Means economy is growing fast, and at the same time tire industry also is picking up. So, and also vehicle sector also picking up. That means India, the demand side is performing well, and at the same time India also, it is a wintering off season, means there's a low season supply season, low season, it's a season of low supply. So means the Indian market actually still Indian market was 0.1% lower compared to the previous week. Then we will come into the futures market. What happens to the futures markets? Shanghai futures market averaged 4.1% lower during last week compared to the previous week, compared to a week ago. 4.1% means the fall in the futures, Shanghai futures, was considerably higher compared to the fall in the physical markets like STR20, Latex, or RSS. Coming to Psychom TSR20, averaged 3.4% lower last week compared to a week before. Psychom markets. And also Osaka RSS3 averaged 4.4% lower last week compared to a week before. Means all the three futures market went down by 3 to 4%. Or in other words, the futures market suffered losses, more losses compared to the physical market due to negative sentiments generated by at least 4 factors. The 4 factors which impacted the sentiment in the market are: one, fear of aggressive policy tightening by the US Federal Reserve. So the US Federal Reserve meeting of the FOMC, Free Open Market Committee meeting of the US Federal Reserve was there last week. And after the meeting, the Federal Reserve Chairman announced that Federal Reserve is going for more aggressive policies, and also the Federal Reserve is considering a rate hike, means a higher policy interest rates starting from March. So this is a little bit earlier. So even before the meeting, the market or people in the market were expecting such a decision by the Federal Reserve. So because of the fear of aggressive policy tightening, the speculative investors in futures market were keeping away from riskier investment. Policy tightening or higher policy interest rate means dollar is going to be stronger or interest rate is going to be higher. Dollar is going to be stronger as well as interest rate higher means the borrowing cost is higher. Both are not good for speculative investors in terms of, because that will affect their return from the venture. Then another major issue which has negative influence on the market sentiment was the geopolitical tension from possible Russian attack on Ukraine. So this is another major important issue. Possible attack on Russian attack on Ukraine means it has economic implication because the US and its allies will be putting economic sanction, and that is having potential impacts on the global economic recovery. Then another major development happened last week was the IMF scaled down the world economic outlook for 2022 by 0.5 percentage points. IMF has scaled down their outlook for China by 1.2 percentage points, and also by the US by 0.9 percentage point. So it means for the major NR consuming countries and region, also for the EU region, major NR consuming countries and region except India and Japan, IMF scaled down the outlook for 2022, having implications on the NR demand outlook for 2022. Then another important issue which impacted the sentiment in the market was Ahead of the long holiday for the Lunar New Year, speculative traders at the Shanghai markets shortened their position, means sold the position, as they perceive risk arising from the factors earlier we mentioned. So many risk factors. So whenever they perceive a risk, normally they will be keeping away or selling out the riskier assets and going for safer investment avenue. So this was what happened during last week. So summarize everything together, we can say that last week what happened, we have seen physical markets. Actually, market went down. Generally speaking, market went down both in physical and futures market, but the decline was more prominent in the futures market because futures market were weighed down by a set of various negative factors and the negative market sentiment. But the physical market, it received support, cushioning support from the low supply, seasonal low supply. And also we have seen, as predicted, rightly predicted, lattice price performed better than other dry forms of natural rubber. So this was a summary of what happened during last week. Now looking at what lies ahead during the coming week, what can be expected. So one important thing, we can expect total absence of China. That is sure, total absence of China from the physical market, because China will remain closed until February 7, and Shanghai market will resume trading only by February 8. So China is very important because, as I mentioned earlier through this particular forum, China accounts for 43% of the world demand for natural rubber. So China's total absence in the market is something important for the crucial for the market. So number one, total absence of China will be severely felt in the market in the coming week. Or we can say that it will be a dull markets. Major buyer is away from the market, with dull markets. Number two, dollar is likely to stay strong in the short term because Federal Reserve, US Federal Reserve already indicated a rate hike beginning from March and more aggressive policy tightening measures to tame the inflation. So we are expecting dollar to stay strong in the short term. Dollar staying strong means commodities and those people trading in natural rubber, physical and futures, it is more expensive to them. More stronger dollar means buying commodities or commodity futures is going to be more expensive. So this is a negative factor. Then third factor, which is going to dominate the market sentiment during the coming week, is a geopolitical tension. The geopolitical tensions are staying elevated. Speculative investors normally keep away from riskier asset classes. They stay away from riskier asset classes whenever they find some kind of geopolitical tension, because when there's a risk is arising in one particular area, what they normally do, they will be leaving riskier assets and going towards what is called a safe haven assets, something like a US dollar or gold, something like that. So this is having another negative implication, going to have a negative implication on commodities in general. So geopolitical tension will be a negative factor. Then another negative factor, IMF has already scaled down the global economic outlook for 2022, and that include major NR consuming countries like China, US, European Union. Only Japan and India are the only two countries among the major NR consuming countries where IMF has slightly scaled up the outlook for 2022. So for the other countries, China, IMF has scaled down the global economic outlook, means the demand outlook for natural rubber from these countries, including China, US, and Europe, will need a corresponding scaling down. So it means expected demand for natural rubber from these countries like China, US, European Union will be lower than expected earlier. This is another negative factor, another implication of the IMF trimmed global economic outlook, implication on the natural rubber demand sector. Then on the positive side, we have to consider that the physical market is likely to get more support compared to previous week. Support is going to be more because more countries are actually the seasonal low supply season. The seasonal low supply has started in more countries, and more smallholders and the estates have stopped the tapping. That means the off-season of supply is going to be felt a little bit more compared to a week before. That means the coming week, global supply will be lower compared to the previous week, and that will be having a positive impact on physical markets. So this is going to happen in the fourth week. So that means the physical market, we have to consider that there is no Shanghai market during until February 7, and the Psycho market will reopen only on February 3. That means speculative activities it will be less absent next week. At the same time, that means whatever happening in the geopolitics and all this may not reflect on the market, because physical market, futures market is, especially the Shanghai market, is closed until February 7. So those things need not reflect on the market. But at the same time, the physical market will be getting very good support from the short supply. So in the short term, physical market is likely to get support from the short supply. That means the prices can at least marginally improve in the physical markets in the coming week, and that need not be the case if the Shanghai market was open, because Shanghai market is closed. So the various negative factors discussed above, like a geopolitical tension, and those things may not be getting reflected in the markets. And likewise, what we have mentioned, we expected last week, we are expecting latest price to perform better in the coming week in relative to the TSR prices. So we can expect latest price to be better because it is seasonal low supply, and latest processing factories how to run the business. They have to get the raw latex or fresh latex. So they have to encourage farmers to sell the produce in the form of fresh latex. For that, they have to offer a premium price. If the premium price is not offered, they'll be selling the produce in the form of capillum, which is easier for farmers. And normally, unless there is a premium price, farmers will do that. So we are expecting a better price for latex relative to TSR. So this is all what we are expecting in the natural rubber markets in the coming week. Thank you very much. See you next week, next Monday at the same time. Thank you.